Okay, so I'm going to talk about the different types of cryptocurrencies. You could describe cryptocurrencies very different ways. You could describe them by the consensus mechanism. You could describe them by the use cases, a variety of ways. However, I'm going to describe some in terms of their core purpose, whether intentional or what developed organically. The first of these and the most popular is Bitcoin. I'm sure I've heard of the word Bitcoin. It's the most popular, has the highest market cap. Currently, it's about 19,000 US dollars. It was as high as 70,000. It's primarily seen as a store of value in that people only see it as a way of investing. You put money in, the price goes up, and you make some kind of profit. So it's like an investment more so than a currency, which we'll come back to. Ethereum is also quite popular. I would say Bitcoin and Ethereum are the two most popular. The market cap is a bit lower, but Ethereum specializes in smart contracts, which essentially, just like you have the transparency for transactions, smart contract, people think of it as a transparency for computer programs or instructions. So you could build up applications upon Ethereum. Ripple, another cryptocurrency, is targeted to financial transactions between major institutions. Tether is a stable coin, which essentially is supposed to keep the value around $1 US. Bear in mind that these currencies can be quite volatile, their value. Tether is supposed to keep it constant. Cardano, Solana, those are just some other new ones that have come on stream that have grown in popularity, that provide some abilities like Ethereum, as well as the ability to scale, which remains a challenge for cryptocurrencies. Okay, the last word I mentioned was currency, and the term is cryptocurrency. For something to be a currency, despite the name, is it an actual currency? For something to be a currency, you have to fulfill certain criteria. You have some listed here. It has to be fungible, interchangeable, $5 is $5, durable, portable, recognizable, stable. You have a stable supply. Although they have the name cryptocurrency, and although the original intention was a currency, there are many that argue that these things are not necessarily cryptocurrencies, and not necessarily currencies. They don't satisfy the criteria for currency. So there's a big debate as to whether they should be termed as a security or they should be termed as a commodity. A security, of course, like an investment vehicle, is a commodity, is something like you use for some other purpose and as a kind of input for production, something that's traded. It's not really about investment. But I'm sure most people, when they think of Bitcoin, they hear about, people getting rich, you put in some money and the price goes up and you make some money. Nobody's really using it as currency as, let's say, it was originally intended, at least for Bitcoin and some of the major currencies. The risk is that depending on whether it's security or commodity, it depends on how they're regulated. So although fundamentally the decentralization of these currencies make it very difficult to be regulated, there's an argument that they can be regulated and need to be regulated. If it's a security, it will be regulated a particular way. If it's a commodity, it would be a different way. I mentioned, say, Ripple, which because of the way it was structured in its tokenomics, it was classified as a security, or at least the SEC in America was saying it's a security, which caused it to be delisted from variety of exchange and its value dropped. So you need to take into consideration that these cryptocurrencies are different in a variety of ways, like I mentioned, and that variety of ways could potentially affect the investment and the value of the currency. Okay, maybe I'll go a bit quickly, but for the latter half, I'm going to speak about aspects of cryptocurrency in terms of the use cases and investment, and how you can make money and how people make money from cryptocurrencies. The first aspect I'll talk about is, of course, the investment. You buy the cryptocurrency and you hope to make a bit of money. Bitcoin, again, which is the most notable, the most widely known, it started as a few pennies and it's reached as high as 70,000 US dollars per currency. If you bought at the very beginning and sold at the highest, you stand to make a lot of money. However, of course, cryptocurrencies value tend to be quite volatile, meaning they go high, you could make a lot of money, they drop low, they can make a lot of money. If you want to invest $100,000, how do you feel if you wake up tomorrow and you see it's only at $20,000? It could go up as 50,000 to 200,000, but equally it could drop. And that volatility makes it a highly risk, a very risk heavy investment vehicle. But if you're willing, you can't do that. There are exchanges, so like Coinbase and different marketplaces where you can go and purchase these cryptocurrencies and hope that the value goes up. But again, the risk is that they're quite volatile. It was actually thought that it could be like a hedge against inflation is happening now, but it turns out so far not to be the case. The value has dropped despite the theory that it would remain constant during inflationary times. But that's a topic for another day. Okay, I did mention that the original use of cryptocurrency was supposed to be as a currency. It hasn't turned out to be the case because many see, mathematically that cryptocurrencies are deflationary rather than inflationary. Again, the expectation of these currencies will increase in value as time goes by. Whereas monetary policy is normally based on the fact that currencies tend to decrease in value. So if you have $1 today, will it be worth $1 tomorrow? That's not the case. So people spend $1 today rather than, saving it for tomorrow because it'll be worth less. Whereas for cryptocurrencies, $1 today might be worth $10 tomorrow. So people tend to hold on to their money rather than use it for everyday transactions. I mentioned the pizza example where a guy paid like 10,000 Bitcoins for a pizza in, at the beginning of the Bitcoin, and now that amount of money is worth like billions of dollars for a pizza. So the value goes up for Bitcoin and some other cryptocurrencies means that people tend not to use these things as currencies. So although it's named cryptocurrency, it's probably not quite effective as a currency. Mining, again, like I say, is the ability to add a block to the blockchain. And this is another way you could make money from cryptocurrencies, not necessarily buying and trading a currency, but say mining. Again, it's the ability to add a block to the blockchain. If you add a block to the blockchain, you get rewarded in a certain amount of cryptocurrencies. However, the big mining firms have these, like I said, these massive warehouses with racks and racks of supercomputer, specialized computing to guess this random number. That, like, if you take your computer at home and try to mine, you're never going to compete with these institutions, these companies. You probably spend more in electricity than you'll make back in profit. And the likelihood of you guessing that random number is very, very low. So if you want to go into mining, you might have to join a pool where people put together to kind of try and guess that random number, and then the profits are shared between them. Proof of stake is another way you add money to the stake, again, because they do have limits as to how much you could stake. You add money to the stake, and then if assuming the stake was the limit and you win the block, then you're rewarded in some cryptocurrency. Okay, this isn't so much cryptocurrencies, but something that is related to cryptocurrency. We are well aware of Dcash from the ECCB, which is a central bank digital currency, a CBDC, which is a popular discussion recently, and essentially a digital version of a currency that's kind of endorsed by a central bank. It doesn't necessarily have to be a cryptocurrency. You could have a centralized CBDC, but a bank could put their digital currency on top of an existing blockchain ledger. It has some advantages and disadvantages, but it's not necessarily specific to cryptocurrency, but cryptocurrency can be used for the purposes of CBDCs. NFTs is another term that most who follow the cryptocurrency industry might be aware of. As I mentioned, cryptocurrency gives it transparency and immutability, and it gives the ability to add tickets. Tickets can be used as currency, but a ticket could also represent a unique thing, which is like, say, a playing card, a basketball card with Michael Jordan, a cricket card, etc. You could represent that on the blockchain, so you could see, because the transparency and immediately you could see who owns it, who sold it to whoever, etc. That's transparent. The value of those, I think, like last year, kind of skyrocketed, but it just kind of crashed. People say it's a very speculative market, and those things are very, very overpriced. So you have to be cautious when approaching NFTs. I'll end with probably the most exciting thing of cryptocurrency or blockchain technologies, and it's decentralized finance. And importantly, what it means is that you provide financial services through a decentralized manner. And that could include things from lending and borrowing, margin trading, insurance, decentralized exchanges and stable coins, etc., as well as some of those things that people are currently working on and haven't been, say, developed yet, because there's a lot of flexibility with this decentralized technology and the smart contracts to create innovative new financial instruments and vehicles. So to explain that better, the premise is these services, so lending and borrowing, insurance, etc., previously would go through a central body or institution. A bank could handle these things, etc. But with the decentralization, you could do these things without the need of a bank. So you could lend money and borrow money, no need for a bank. You could provide insurance without no need for a bank. There's no regulations. There can be no regulations, etc., that allow you to do these things. The decentralized nature removes that middle person and opens up the world to a wide variety of solutions that are less restricted than the existing systems that are regulated by this institution and banks. So I think this is the most exciting part of cryptocurrencies right now, blockchain technologies. Of course, again, there are risks. While the non-regulation and the decentralized sound good, they are vulnerable to hacks. There's no consumer protection. If something goes wrong, who do you run to? And there's nobody in charge. And some of these loans require collateral, etc. There's a lot of risks involved. Like I said, there's a lot of benefits with all of these things, and it centers around decentralization. Do you consider having someone to go through and talk to useful, or and regulation useful, or do you prefer no regulation and being free to do what you want? Depending on how you feel, it probably determine how you approach these things. I should make a mention of Web3. I think I might run out of time. Because there's another term that keeps coming up and is not fully defined yet. But essentially, it's where you have companies that are built without no one person running the company. You have, again, the keyword for these things is decentralized. These organizations are run by no particular person. They're simply run by votes on the blockchain. And that gives some flexibility, and similarly, it has some disadvantages. And it's another thing to see and kind of observe how it develops and go from here. Okay, thank you. I think that should be it for me today. I probably went over my time, but and at the same time, I think I went quickly, but hopefully everyone is able to understand the majority of the content. Thank you.
Thank you so much, Dr. Joseph. That was a mouthful of information about cryptocurrencies and all the different parts and pieces of it. It felt like it had high barriers to entry, but in your explanation, I realized why that is so. So I have a question here from one of my friends. He said, I used to trade using crypto, but the banks didn't allow for me to transfer my monies from the cryptocurrency to my account. For that reason, I stopped. It felt like I had monies in the clouds. What do you suggest? From the cryptocurrency to my account. Ask the question again. Oh, sorry.
That's a good question. So first of all, there's always a way to get money out. Clearly, because of the lack of control that businesses have over these institutions. Clearly, because banks have less control over these institutions, of these services, and the risk of money laundering, because there's some privacy that blockchain involves. Some banks do not want to touch or get involved with cryptocurrencies. But because the cryptocurrencies that you have can be moved around without regulations. So you could trade a cryptocurrency for another cryptocurrency, and you can move that across services until you reach a point where you could get that money out. So there are reasons why they might not want to take your money out. There are always ways to get it. There'll, of course, be tax and stuff like that you have to take in consideration. So like I said, there are legitimate ways of getting it out, there are illegitimate ways of getting it out. But there's always a way. That's all I can tell you. There's always a way of getting it out.
All right, you said there's always a way, and you said at some point, and you mentioned taxes being involved. So, why then is it important to even begin the investment, spend the time and effort to learn to trade, to then make losses, make wins, make losses, and then this money is in the cloud and there's this streamline to actually get it in hand, to actually purchase something using the currency. So what do you suggest in that regard?
So again, say although that person would have difficulty coming out, there are banks that allow you to take out the cryptocurrency, transfer that cryptocurrency into real cash. At the same time, some of those there are services that accept cryptocurrency, so you could spend or purchase things with that cryptocurrency if you cannot necessarily get that money out. So I'm just saying there are ways, although the person may have had difficulty, there are banks and institutions across the world that allow you to get that money out. So it's not pointless, it's not useless. There might be some difficulty based on where you are in the world and the jurisdiction in which you're operating in, but that money can get, you just need to find the appropriate place to get that money out. I did mention the tax thing because, as I said, depending on the jurisdiction and the regulations of that particular country, you may need to pay on it. So, like if you find say, another country that allows to take the money out, would you still be subject to the taxes in your local country? Those are questions that you need to answer, and I can't necessarily answer for you, depending on where you are. So that's the point I'm trying to make. You can't get it out, but bear in mind those kind of things that involved in you getting that money out.
Why does the business of blockchain use so much energy and power?
Could you repeat that question? I had some issues with the audio.
Sorry. Why does the business of blockchain use so much energy and power?
Okay, again, good question. I touched a bit on that. So essentially, like I said, to add a new block to the blockchain, you need to do some work. For proof of work blockchains, you need to do some work. The fact that you do the work, like there's a penalty there's a penalty to add the block, and there's a reward for adding the block. The penalty is that you have to do a certain amount of work, and what happens is you have to guess a random number that satisfies a particular criteria. That random number is not a number between 1 and 10. It's like a number between like 100 trillion. So for you to find that random number, like trying guessing random numbers, it takes a lot of time. If you get a computer, you could do it faster. If you get 10 computers, all of them trying to guess that random number, they could do it faster. So that's the premise. The more computers you have, the more computational power you have, the more you're likely to guess that random number. And so people with more money, they put more computers, they put more computers together, they build these massive warehouses, all these computers are just trying to guess this random number that satisfies this criteria. Computers use energy. The more powerful the computer is, it uses a lot of energy. So these companies go in places where they could get cheap energy to put up these massive mining farms. And because like I said, when you add a block, you get a reward. So you need to keep your energy costs down, in the hope that you still profit. So if you to be more specific, the energy comes from the use of these computers to try and guess a random number. That's all these computers are doing, trying to guess a random number. The more computers you have, the better chance you have of being able to guess that number. That's where the energy usage comes from.
Thank you. I want to mention that there's a slight delay, so that explains why there's that pause. The next question. People always ask, should I invest in crypto? What would you advise?
Whenever people ask that to other people, they tend to say, don't invest more than you can lose, than you can afford to lose. So the end of that statement, somewhere else, like, don't invest more than you can lose. That would affect your lifestyle. So like, if the amount you put in, if you lose it, is gonna really affect how you live, then you probably shouldn't invest that amount. The key thing about crypto is it's quite volatile. The currencies that people tend to invest in are quite volatile. Bitcoin, like I said, it goes up. You stand to make a lot of money if it goes up, but then it also drops a lot. Since its introduction, if you draw a trend line, it has gone up. So if you're at the beginning or in the middle and you kept your money in, you probably would have made a profit. However, on a day-to-day basis, it goes like this, right? And let's say if you have like an index fund like S&P 500 in the real stock market, it might go up by a percent today, it might go down by 2% today, it might go up by 3% tomorrow, go down by 2% tomorrow. So the changes in it, is quite steady, whether it's going or going down. Bitcoin, it goes up 80%, like I say, you put in $100,000, tomorrow you wake up, it's $20,000. Some currencies have fell by 90 plus percent. So it's highly volatile, which makes it quite a bit of a gamble, especially if you take your money out, right? So I would say it's something that's very high risk. It's very high risk. So if you're comfortable making risky investments, then it might be a good idea for you. But if you're not comfortable taking risks, then it's not a good idea. And if you're going to put money in, only put a limited amount of money that won't affect the way you live your life right now.
Thank you for that response. What are the most successful cryptos and why? You mentioned Bitcoin, a few others that I've not heard about. What is the most successful? Where should someone start? What is a good one to learn in? Cryptos and why? You mentioned Bitcoin, a few others that I've not heard about. Bitcoin, a few others that I've not heard about.
Okay, so someone in the industry told me recently that like businesses, you tend to have like a lot of competitors for a new industry, but eventually it kind of ends up being to like two main entries. So like in soda business, there's many other soda companies, but at the top it's Pepsi and Coke. Say for smartphones, there are other manufacturers, but they still end up being say Apple and Android. Currently, the two main cryptocurrencies are Bitcoin and Ethereum. Bitcoin is popular. It was the original, and its value is the highest, as in like the value for one Bitcoin is the highest. Ethereum, the value isn't as high, but it's very popular for people to build software on top of. So I would say those two. If you're interested in cryptocurrencies, you need to understand what is pay attention to those two. And where Bitcoin goes in terms of like if Bitcoin starts going up, you'll find that other currencies start to go up. If Bitcoin starts to fall, you find other currencies start to fall. So if you pay attention to those two, you'll have a good impression of what the market is. A part of the question was like, which is the most successful? And that question is kind of unanswerable because like, how would you define success? as I mentioned, many of these cryptocurrencies have different use cases. So are we going to judge them by the value? So this is worth 60,000 US dollars versus this one is 1,000 US dollars. But the one for 1,000 US dollars is being used for like building applications upon. So as I select say Ethereum, a lot of applications are being built on it because that's this selling point of it. Whereas Bitcoin, which is quite expensive and very difficult to build stuff for, there aren't many applications being built on it. There are other cryptocurrencies that also have other use cases, and some may have maybe achieving those use cases without the currency itself being, have some high market value, high market cap. So success is hard to define for cryptocurrencies. It depends on how you want to measure it. But Bitcoin as well as Ethereum are currently the most popular, so to speak. And I think you should start off understanding those technologies before you go on to anything else.
I saw Bitcoin Cash pop up in St. Kitts. The banners were everywhere, they had ads out, and the local businesses encourage persons to download Bitcoin Cash. How is that different from Bitcoin? Would you encourage persons to invest in Bitcoin Cash?
Okay, so with respect to that question, the person mentioned at the end the word invest. Now let's move away from invest for a bit. Bitcoin, Bitcoin itself, the original Bitcoin, like I say, it's the most popular and it's also the most value in terms of one Bitcoin was as much as 70,000 US, currently is around 20,000 US. There are fees associated with Bitcoin. So like every time you make a transaction, I didn't mention all this in the presentation, but every time you make a transaction, you pay a certain fee. And because Bitcoin is so expensive, that fee can be very high. So if you want to buy a cup of coffee, which is say $10, the Bitcoin fee might be $100, which makes it very impractical for making everyday payments, right? So that's another conversation. But the cost of these fees can be very prohibitive for making everyday payments. So Bitcoin, because of that factor at least, people don't tend to use it to pay for things because the fees can be very high. The reason that the fees are high is because the blocks that I said that contain these transactions are fairly small. So let's say a Bitcoin block, I think is like 2 MB, which can only hold so much transactions. Um, so if you were to put more transactions in a block, because there are more transactions, when you divide, the fee per transaction get cheaper, so to speak. So what Bitcoin Cash does, like their motivation is not to be Bitcoin via, it's more used for investment. Bitcoin Cash's intention was they want the currency to be used for everyday purchases. And because they want it to be used for everyday purchases, they had to be able to put more content within a block. So they have bigger blocks. They have bigger blocks. I can't remember the current size, maybe 16 megabytes or something like that, or 8 MB. They have bigger blocks, which allows the fee per transaction to be lower. And because of those lower fees, if you pay the coffee for $10, your fee might be, 50 cents rather than $100 that Bitcoin might provide. So the motivation for Bitcoin Cash is not as an investment. It's designed to be something that you use to pay for things. So it's not about making money. At the same time, the price fluctuates. They're trying the best, I think, to keep it constant. Maybe it may or may not be, but you can track the chart to see if you can make money from it as an investment. But the intention is not to be an investment, it's to be used for everyday purchases with low fees.
Okay, interesting. That brought some light to me as well because I was also, where did Bitcoin Cash come from and how is it different? So you answered that question. Last question for you. If you are to explain the benefits of investing in cryptocurrency to the layman, what would you tell him?
the okay, throughout the presentation, I showed a variety of ways that you can invest in the area of cryptocurrency, but not necessarily buying cryptocurrency. I mentioned these decentralized financial solution. I mentioned mining, staking. There's some options like providing liquidity and stuff like that. There. I mentioned those specifically to make the point that you can invest in the cryptocurrency industry. These companies, Coinbase, etc., are listed on the stock exchange. Some of these mining companies are listed on the stock exchange. Some of these decentralized financial things allow you to put capital in and get a return based on people borrowing that cryptocurrency and investing elsewhere and then paying back fees, etc. So you can make profit in the cryptocurrency industry that way. Um, in terms of buying cryptocurrency themselves and hoping that the value goes up, I would tell you invest in it if you are comfortable with a highly volatile currency. If you are someone who has the money to spare and you're comfortable with the risk level, then you can put your money in and hold it long term, I would say. If you do it short term, you're just more or less gambling. Hold it long term and you can't make any money. I'm not the financial advisor, but yeah, that's the most I'd say. If you're comfortable with the risk, go for it. But it's very risky.
Thank you. You mentioned short term and long term. What is long term as it relates to cryptocurrency?
I don't think there's a formal definition of long term. I don't know if in the actual investment market, if they have a specific time period that they define as long term. Certainly, day trading, I would say is day trading is a short term. If you're gonna sit down in front of a computer every day and try and track the value of currency. Okay, today it goes up by this, and then okay, it goes up by this. Let me sell, and then tomorrow it goes up. It goes down. Let me buy. If you do it on a daily basis, a weekly basis, if you track your thing on a daily basis and make decisions on a daily basis, I don't think you will profit in the long term. I mean, you can't be like I say, but it's just like you're just throwing a dice. Um, it, Long term, I would say maybe years, even 1 year, 2 year, etc. That should be long term. Like I said, I don't know if investment market they have a specific definition of long term, but I would say keep your money for a few years. And if you look at it every day, like it's because it's so volatile, it might give you a heart attack because someday it drops. So just put the money in, don't look at it, and then see where it goes.
All right, thank you. Do you have any final remarks for us?
So fundamentally, again, cryptocurrency is about decentralization, which means the lack of one controlling party. And that opens up the opportunity to create a variety of services, including cryptocurrencies themselves. But let's say there's other decentralized financial things that I encourage people to look into that allow you to do these amazing things. The industry itself is still early. So a lot of these things are said currently the governments do not know how to regulate them well. And some of these things you don't know the long-term success of what these services would be, how well they'll be received. So we're still in the early stages of this industry. So even if you may not necessarily want to put your money in, if you're thinking of making money from it, it's certainly an industry to look out, to look at, to keep an eye out to see how you can fit in, how you can make money, and whether you should stay clear from it. I do believe that regulation will come in at some point. Like I said, there's a lot of debate between countries and jurisdictions, like how do you classify these cryptocurrencies. And now you have these decentralized financial instruments and institutions being created. Like how do you govern them? Important, like I say, sometimes technology goes in front of legislation. right? Because you have quite inventive people invented these new things, and the laws on these books do not necessarily cover these things very well. So there'll be a catch up. These regulations and these laws and governing bodies will catch up to some extent and make some decisions that affect the path of this industry. So do keep an eye out on what's happening, and see if you can make some money from it if that's what you're interested in.
Thank you so much, Dr. Joseph, for your presentation and your answers. I know rather that we are a little bit more clear in our minds as to what cryptocurrency is. Mr. Blake, do you have any closing remarks for us?
Just a few brief remarks. Just following on from that presentation, very interesting presentation by Dr. Joseph. We at the ECSE, we are getting our feet wet in the area of the blockchain technology. We are looking at developing a market for the trading of tokenized securities, and that we anticipate will come on board in the relatively near future. So there's some scope for those of you who are interested in this particular form of, or these assets, these types of assets, to do so on an organized exchange. What I want to say to the public out there is to start investing if you have not yet done so. I think the evidence is clear. If you want to build wealth, if you want to create wealth for you and your succeeding generations, you have to get involved in investing. Not many of us will ever get a big inheritance, and it's even when we remote that we would win the lottery. So if you really want to create wealth, get involved in investing, and more importantly, invest on the ECSE. Again, for your security, invest on the ECSE. Thank you.
Thank you. I take this opportunity to thank Mr. Trevor Blake and Dr. Daniel Joseph for their insightful presentations, the viewing audience, the Financial Information Month partners, and the technical team here at the Eastern Caribbean Central Bank. Financial Information Month Festival is celebrated in October annually. Thank you and have a great evening.
It's Financial Information Month in the Eastern Caribbean Currency Union. Financial empowerment through education. If you don't know what that is, let me tell you all about it. Learn to spend wisely. FIM. Invest to grow your money. FIM. Business stability. FIM. Step up financially. FIM. Help build the region's economy. Work to financial security. Prosperity for all of we. FIM is for you and me. FIM is for everybody. So tell your friends and your whole family. Financial empowerment through education. Build yourself and the entire region. Learn to spend wisely. FIM. Invest to grow your money. FIM. Business stability. FIM. Step up financially. FIM. Financial Information Month. Financial empowerment through education.